All right, back testing session. This might be one of the more complex ones I've seen in a while. Starting off the week here with Monday, and I'll do some markups on this week to showcase how this setup still worked but requires a very deep understanding of this PM liquidity and then the London range along with the weekly profile for this back end of the week play. So we're still on the 15-minute chart, looking at the daily separators. We've got a news event on the Monday, nothing else for the rest of the week. So ISM at 10. That creates the Monday's range. We can see price float around the midpoint on Tuesday, potentially forming a Monday high, meaning we're expecting some sort of consolidation Wednesday into Tuesday, Thursday into Wednesday. But the consolidation happens on Tuesday. We have a wick low, leaving engineered liquidity, no close, and this midpoint getting absolutely obliterated. We have a projection off of London's range up into this inefficiency, which is also an H1 order block, and price rolls over aggressively bearish all the way through Wednesday into the Thursday Asia session. Price reaches a standard deviation on Monday, fails to reach the other one. London session gives a suggestion to be bullish, pulls back to the 50% of the range and explodes higher with one retest on that standard deviation level. Price rallies all the way up to Monday's low and starts off the Friday PM session underneath Monday's low and uses that to push higher. Again, London's range projection. We take out the intermediate high. We fail to take the swing high, making this technically still a bearish weekly profile, but ending in effective consolidation for the week. Price opens up the week here and price closes the week here. So basically a doji of a weekly candle. So the liquidity story in here is running lows, not making a Wednesday low, but now we get a Thursday low, which is great. This is a profile that I fully understand. Thursday low will take Tuesday highs. Tuesday highs were already taken, but we can see the sensitivity around that Tuesday high level here over to the right. So that level is where price reaches up to, stabs above, and then breaks back down to London's range over here. So when we get to this high of Tuesday, we make one more stab higher, taking out Wednesday's high, and then rolling back lower. And where do we go to? We get to Monday's low before having one more bounce on the week to the midpoint and then closing in consolidation on Friday's PM. All right, let's go to the more complex stuff. All right, so we've marked out now the 15-minute ranges on the PM session of the previous day. I'm going to change this Monday into just the Monday high, low, high and low and midpoint. Standard deviation levels are down here. They're still salient, but they're going to be less relevant for this. So the model so far is identifying where's the break of the PM session range using the intermediate 15-minute swing before the new day start. If we break bearish, then the anticipation is that we will retrace and continue bearish. If we break bullish, we'll retrace and continue bullish. So here's where this week is maybe the more complex week for two reasons. Number one, let's look at each day. And we can see that price breaks out. We have this indication that we want to be bearish for Asia. We break out. We fail to get much lower than the New York session range. London then retests the low, 15-minute swing, pushes lower again, but then breaks into the range. So this invalidates, or this will give pause. Just like the London range, we can come back into the range and retest all the way to the high and still be bearish. In this case though, we come back into the range and then we run up breaking the 15-minute swing. So now we retest the swing and we push even higher. Complicated because, well, first off, it's on Monday, and so there has to be a dose of caution, additional caution given on a Monday, but also to see how far price went down before coming back into the range here just before New York, and then breaking the range to retest it. So using London's range is where we would say, well, this was expected to stay bearish. It failed to do so, not taking out the Asia low. Retesting the bottom end of the range, pushing lower but failing to take out lows. And then this grinding movement up back into the range, willingness to wait until price pops the high. If we were to have seen a retracement, like break and go lower, like we'll see over here, for example. But instead we break it aggressively, retest it to go bullish, and then go bullish even more. Tuesday, session opens up, new day on Tuesday, previous 15-minute swing high, swing low. We see the indication we want to be bullish. We're breaking above. So we're waiting to see how price uses this liquidity in New York. 9:30 opens up, aggressively runs lower, all the way to Monday's low. In fact, there's a nice 15-second entry here. Price retests that as a fair value gap entry, and you can see as we push back into the range, we have a retest going all the way to the other side of the range again. We don't have a continuation higher. We reach that level and then we fail to go back into the range. We don't go back to the 15-second fair value gap, but price just stays within there. Tuesday into Wednesday, new day Wednesday, swing highs. If we find a swing low, we have to look back to a swing high. If we found this swing high, we have to look back to the swing low. Price breaks the low, suggesting bearish, allowing for a retest of the high. We can see the attempt here. Price breaks and closes back in the range. Wicks, wicks, wicks. But London's range still has to be utilized. This runs up at 9:30, straight into an H1 order block and this 15-minute inefficiency. So clues would be consolidation on Tuesday. Clues would be consolidation on Tuesday. All eyes are in and around these internal liquidity points. Price staying above Monday's low, breaking Monday's midpoint, running so aggressively higher, only to get stomped by an H1 order block or this 15-minute inefficiency, which also lines up with a projection on this London range. Price failing to go higher, aggressively breaks lower. One retest on the midpoint, another retest on the 5-minute of London's low. We can see a very fast move down on Wednesday. The assumption here is nothing. Monday high, maybe, that's the only thing. So Monday high, the week profile would have seen a consolidation, midweek consolidation, where one day will fold back into the other day. We have that, but we also have something that's interesting because it's Wednesday into Thursday for the back half of the week. So previous sessions, 15-minute swing points. Just this down to here. So we can see the preceding 15-minute swing points. Asia stays within. We then have a run lower. Just like on Monday, where price ran lower and then came back inside of the range. Price runs lower, comes back inside of the range, fails to make any new lows. Retest the midpoint of London. Rejection off of the PM session range. A very fast retest on a lower time frame here at the PM session range low. And this is even before New York. Price makes one pop, giving it signal. Here we have London's high being retested in New York. We push up, reject off of that 15-minute, some sensitivity, break it, and just keep breaking it, going higher. So this Monday high then gets trumped by this Thursday low. And it's a validated Thursday low when A, price comes back into the PM session range. B, when price revisits London's range high. And that sensitivity kicks price off to go all the way up into the Monday low of the week. So the Monday low offers some resistance sensitivity where Monday's high would have still been a favorable play. We can see this deep retracement only to be completely undone in the PM session. Friday, the most complex of them all. 15-minute swing point is here. And we do not, if we go back to the left, there is no 15-minute swing that's not yet broken until we get to Wednesday's high. So the range is from this low to this high. This high is not valid because this is broken, and this is not a 15-minute swing before the session open. It's a wick high, but it's not a 15-minute swing because the next candle is in the new day. This is not a valid high because it was taken here. This is not a valid high. This is not a valid high because they were both taken on that spike up. So now the range that we're working with is that swing high, that swing low. We see it again. Asia does not break it. London breaks it, comes back into the range, works off of Monday's low, retests the PM session range low, runs to the session high. This is an indication that we want to be bearish in New York. These are setups that capitalize on that protraction, on that push to get to where we want to be bearish. This is an indication that we want to be bearish in New York. But we have to get somewhere to be bearish. This is an indication we wanted to be bearish in New York. This was an invalidation of that idea, working off of a higher time frame, higher order profile, which would have been the weekly profile. So this Monday high at this point became a challenging idea because where should the retest be? So why this is complex is that it's not simply running off of the liquidity, but it's also running off the narrative of the week and using the steps to get to an area of sensitivity versus working off of an area of sensitivity. For example, let me show I'm marking here. So take for a moment the logic that we're bearish. It's a bearish week. We have a Monday high. We have an aggressive bearish run. This is bearish, bearish, bearish. Take for a moment that we're bearish. Where would we want to sell? We would want to sell in premium. So this range is the previous day's high, low, and the halfway mark. We want to sell in premium. We are down in discount. We've swept outside of discount. We are creating new dealing ranges, but using the logic of the previous session, we can see that we're breaking back inside of this range and we're using levels of discount to get to premium. This is a bearish week. We want to sell in premium, but we're using the price action to get to the area of interest as the trade. In other words, counter trend trading. So again, indication was bearish. We're breaking lower. We're willing to retest all the way up to the high. This is running logic off of London's range, exceeding that high, but still fulfilling the nature of the price action. This is indicating bearish, but we need to get to premium if we were to have any sensitivity to go bearish or continue bearish. So getting to premium was the lucrative play. Once we got into premium, that was short-lived, and then we failed to get anywhere else. We could not get lower. The higher time frame profile overrode the lower time frame structure. It broke the lower time frame structure as price was making these sweeps above buy side, only to retest levels like the midpoint of London's range, only to break higher and break structure, only to then come back into an inefficiency and breaker around a standard deviation level, which acted as area of sensitivity before, only to get to premium to then pull back lower. Same thing here. Because this range, so I can take this off now, because this range is really from this low to this high, we're bearish. We are allowed to wait until we get up to premium, but we're in discount. Price goes from discount to premium and then some, but it's still premium of the overall week. It fails to break Monday's high, which means it's not overall a bullish weekly profile. Large bearish play, 2-day large bullish play, undoes this entire bearish play, but it takes 2 days, 1 day, 2 days. Undoes it, but still executes bearishness once the premium level is hit, and then closes or has a reaction off of Monday's low, pumps up to the midpoint of Monday, pumps down. So attempting to stay in that bearish mode, but getting to that level of premium is where that very lucrative plays are. Okay, so I'll mark out London. Okay, so here we have London's ranges. And less about the specific entry, more about the areas of interest here. So the lines are getting a little bit busy. I'm going to fade out the Monday range. And what we're focusing on is seeing how the London extensions act as the draw and then have a reaction. And what I would say is it's the pre-market price action that determines what direction the expansion is. So when pre-market is not going lower and we start to see it going higher in New York, then we set the projections up. We had an indication we wanted to be bearish. We broke back into the PM session range, which is right around London's high. Then we have an explosive move up. We would want to wait and see if we can get bearish moves at the extensions. So price has the first reaction when we get that 1.5 test. There's a black candle, down candle in here. Fails to get inside of the PM session range. So compounding the knowledge on ranges. We can't stay bearish if we're staying above PM session and above London. Those are two bullish indications, not bearish. So with that retread, if that price fails to start getting below London's high, then the assumption has to be something else. So we wick around, we base close around this, the half standard deviation of London and the PM sessions high. We push higher again, fall short of the 2, push higher again, fall short of the 2.5, but then start to close back down. So on a lower time frame, probably an entry right around that area here, another entry here, another entry here, another entry here, and price runs to the midpoint of London but fails to go lower. So we made this bearish range going into Tuesday. 50-minute swing indication we want to be bullish in New York. So we're using this information for trading price action in New York. Entries might be Asia or it might be New York itself. but never London for me. Indication we want to be bullish. Price drops lower at New York open. We reach a standard deviation level with a wick. 15 seconds, there's a beautiful entry. We would want to go on the assumption of bullish. If we can get back into the range, we hold the trade. Price runs. We have a retest on the range low, which is a good sign to continue bullish because we're back inside the range. And we push up. Can't get above London's high. Can't stay above the PM session high. We actually run back down, consolidation Tuesday. Indication we want to be bearish. But London runs higher and we're back inside the range. We want to take that bullishness up to a level. 1, 2, 3, 4 extensions. Curiously, 9:30 to 10 o'clock. 9:45, no surprise. H1 order block. Why would that H1 order block be interesting? Because we are not closing below the level. We're wicking it, engineering liquidity. Engineering liquidity to retest a bearish premium array. Swing high, swing low, full dealing range without the microstructure, just generally speaking. We can see we have this. Whether you take the first entry, if you have knowledge about the extensions, or you take the second entry as price is breaking back down, or you take the third entry, which is closing back below the PM, retesting off of the London midpoint, and then running towards Monday standard deviations. We want to be bearish. Overall profile, weekly profile is giving a different signal when price starts to push higher, but using the logic here, we're back inside the range. Now, if I'm going to be bearish, it needs to be at an extension of London. If I'm going to be bearish, it needs to be at an extension of London, which is why there is this sensitivity around these levels. We break, we clear above the high, so now we can't hold that bearishness because we're above London and above the PM session 50-minute swing. So we have to stay bullish until we get to another relevant area. Then we possibly could be bearish. Weekly profile would tell us this is short-lived. Want to be bearish. In New York, I want to be bearish, but I'm back inside the range. I'm at the range low, retesting it. I'm not going up to go down. I'm going up to get to premium, then go down. It's not just up to go down. It's up to where. And using this range, we would see that we're back inside a range at discount. We have not gotten to any premium level. So our premium level starts here. So I need to get from discount to premium with the PM session range. Complex idea here because there's no clean swing point until this high. Complex. Premium is here. We run and wick. No candle bodies are closing. Wicks. Then we run bearish, getting back down into discount. London's range needs to be factored in as well. We retest London range high. We retest Monday's range low. We can't even get to London's midpoint to suggest full-hearted bearishness. So it rejects. Comes back up into premium. Comes back down into discount. Closes in discount. Complex structure, worth for the journal, and without any entries, just keeping your bearings for the week in price. Several ranges at play, everything framed around Monday, but using the London extensions and using the PM range to set the tone. Where is it validated? Where is it invalidated?